Is retail in a good spot?
Unfortunately, I really don't think so. You have seen consumers badly stretched by inflation. The spending is focused on necessities as opposed to discretionary items. There was a lot of talk last month's consumer sales was supposed to be great. But when we look at it adjusted for inflation, and it wasn't that great. And when you look at what categories grew, again, it was the things that consumers have to buy, with a double-digit increase in food and gasoline still. So the consumer is very, very stretched. The savings are running out. So I generally am very optimistic and a huge fan of the American consumer. But I think this is going to be kind of a so-so Christmas at best.
All right. So Jerry, I mean, we've seen a number of these earnings reports over the last couple of weeks, and I know that you followed them as well. It's been a mixed picture. But many analysts are saying that these are company-specific, sometimes execution problems, as opposed to broader issues, say like inflation or the health of the consumer. I wonder what stood out to you over the course of the last couple of weeks with regard to some of the highlights or lowlights, if you will, of these earnings stories.
Look, Tom, as someone who's run many, many retailers, I've never given myself an old college cheer for having negative same-store sales. But expectations are so low for many of these retailers that their stocks increase by as much as double digits based on what would historically be viewed as very poor earnings reports. So what they're doing is they're beating low expectations. So we saw Best Buy this week. Way to go. But they had a negative 10.4% same-store sales. And the stock soared because it wasn't the negative 13% that was expected. If you look at most of these stocks that have gone up this week, they actually are posting negative sales year over year. In the past, we'd be, apoplectic about that as retailers, saying, what's going on? The market's shrinking. And so what you are seeing here is a few retailers are doing better, but most of them are actually struggling, even to hit last year's numbers. Look at Nordstrom yesterday. You didn't mention them, but they had a very bad report. They're down almost 10%. Last I looked, like 9% in the pre-market. So certainly, the consumer has got to spend the money on necessities. You'll see people beat from time to time, but that's beating lower expectations. Those aren't good numbers by any historical construct.
You mentioned, Jerry, this idea of Nordstrom. It is down about 9-10%, as you point out, in the pre-market right now, on the heels of those earnings headlines coming out. It also kind of begs the question a little bit about whether or not the higher end spectrum for retail is going to do better or worse on a relative basis than the value side of things, or is everybody under pressure right now? Nordstrom, by the way, earlier this week, we saw analysts at Barclays downgrade RH and Williams-Sonoma because of some of the headwinds that they're facing on a more macro basis. So is it the high end that's going to outperform, or the value side of things in the coming months?
Yeah, I think the value is still where you want to make your bets. I've said for many months that despite a tough start to the year, Walmart was the place to be. That's where consumers go historically when times are tough. The dollar stores, the off-price retailers, et cetera. That's where the real gains you might see would be. Costco, again, perennial favorite. They still have the lowest price on anything you want to buy. So they're going to do very well. Amazon has a chance for some comeback here from what they've posted so far this year because they're the place to go on e-commerce. Luxury has held up really well, surprisingly well in this environment. But you see the stock market, even though we've taken a hit from their mid-pandemic highs, the stock market is still okay. And so the highest correlation for luxury sales is the stock market. So as long as the stock market kind of hangs in there, luxury sales are going to be okay. And that's what I'm hearing from most people. I wouldn't view Nordstrom as indicative of the entire luxury segment. A lot of it has gone to, the specialty stores themselves in the very high end, which Nordstrom is actually not. Department stores as a whole have lost massive market share during the pandemic and before. And they're bragging kind of, oh, look, our sales are almost the same as they were in 2019. Well, meanwhile, sales overall are up 40, 50% in the market during that period. It's been a number of years to go back to 2019. So they're losing massive market share, including Nordstrom, who's the class act of the industry. It's just not where people are shopping anymore, even for luxury.
Jerry, before we let you go, we've just got a few moments left here. You're not an economist, but you've been around the block a few times in business. Do you feel as though the inflation story in America has peaked?
Look, whether it's peaked at a very high level and isn't coming down very rapidly, or whether or not it's still got a ways to go and even increase a little bit, I can't answer that question. But I'll tell you what, there's no way we're done with it. It's built into everything. And with the low jobs numbers, still low unemployment numbers, it's impossible to find people to work. And so what you have to do is keep raising the wages. So we're stuck in a wage price inflation cycle for some time to come. Based on my experience, this is going to go for quite some time.